So I know a few of you guys have already seen, the 3-step setup, but I feel like there's always new subscribers. There's new people that come in that are brand new to trading, brand new to the markets, and you probably haven't seen some of my older videos or some of my other strategy videos. So today we're gonna be putting it all together, and I'm gonna be showing you guys or teaching you guys what I believe to be. I mean, obviously I'm a little biased here, but what I believe to be the best strategy that I've ever seen, that I've ever utilized. I don't think there's any strategy that's touching my strategy. I'm just saying, right? I'm just saying. But the reason why I say that, it's more than just it being like obviously the strategy that makes you a bunch of money. But the reason why I call it the best strategy for both scalping and binary options is for a few reasons. Number one, the simplicity of it, right? So it's super simple. It's super easy to learn. I've had so many people that are brand new to trading that literally don't even know how to mark up charts yet, but they're able to use the simple steps that I teach them, and they're able to see some profits. And in my opinion, I believe that's really all you really need as someone that's brand new, is to have those simple steps to start seeing some money, so that you can realize that it's possible for you, so that you can realize that you can do it too. So it's super simple to learn, like I was saying. It's only a few steps. So literally, you guys can watch this video right here a few times and get it down probably within like a week. But not only that, but it is super profitable. So we're going to be looking at the charts today. I'm going to be breaking down how the 3-step setup works, the strategy works. I'm going to be going over a little bit of what we went over on Wednesday session with the whole marking up my support and resistance, and putting it all together for you guys in a what is hopefully a not too long live stream, but a very informative live stream. So if you're ready to get rocking and rolling, get your notepads out, get your pens out, get ready to take some notes, because it's gonna be one for the books, right? We don't do this too often on YouTube, but when we do it, you better be ready for it. All right. So let's get it. Let's run it up, guys. So let's go. So very simple, guys. We're looking back at the charts today. Let's see. We're just gonna scroll through everything real quick. I think the last live stream we was on, we were looking at GU. Right? So we was testing out a few things on GU, so I want to show you guys that. But I want to break it down a little bit more for you guys, and really go into, like I said, the strategy and how it is that I trade. Now, if you guys weren't on Wednesday's live session, okay, I would highly suggest that you guys go back and rewatch that when this is over, because you're gonna want to be able to kind of put it all together. To really be able to learn and kind of just maximize on it, and to make the most out of how it is that I trade. And obviously there's only so much that I can go over in a short live stream, but like I said, hopefully you guys get some value and understand what it is that I'm doing. Now, for this strategy, there's going to be 3 indicators, okay? There's 3 indicators that y'all are going to want to write down, because these are the 3 indicators that we're going to use. And I'm going to break it down a little bit different than how I usually do it today, right? I'm going to break it down different today than how I usually do it. So hopefully you guys are following along. So first one is the Bollinger Bands. Okay. Boom. So how many of you here have ever used the Bollinger Bands before? Drop a BB in the chat if you guys are familiar with the Bollinger Bands. All right. Drop a BB in the chat. All right. And by the way, guys, as you guys start to plug in, you start to get onto the video, do me a favor, just drop a like for your boy, right? Drop a like on the video if you guys are enjoying the content, the information. All right. So, boom. Now, if you never used the Bollinger Bands before, drop a 0 in the chat, right? So, Bollinger Bands is one. The second one is going to be the stochastic, okay? S-T-O-C-H, stochastic. So, the stochastic oscillator. That's going to be number 2. And then the third one is going to be one of my favorite indicators, especially for beginners, and I'll break down why. It's going to be the DMI stochastic extreme. All right. Now, boom. Okay. 1, 2, 3. Yep. So 3 steps and a 3-step setup. So you guys are going to remember this, okay? Bollinger Band stochastic and the DMI stochastic extreme. All right. Now, a quick note about the DMI is that you are not going to find this on, like if you're trading on your platform, if you're trading on the broker, you're not going to find this indicator on the broker. So I always advise people, like, when you're trading, just use TradingView. There's so much more tools and just benefits in general to trading on TradingView, like marking up on TradingView, and then implementing or placing the trade on your actual broker or platform. So I always, even though I trade on brokers like Pocket Option, for example, or Sway Markets, like I always do my markups and analysis on TradingView, and then I place the trade on the broker or platform itself, all right? So I just wanted to toss it out there. So let's move on over to the actual charts, all right? Now, if you guys were on Wednesday's session, you remember I told you guys that when we're trading binaries, right, or when we're scalping in the markets, when you're trading, you're typically looking to trade within two markets, okay? So there's many different markets out there that got, expansion and stuff like that, right? But you're looking to trade in two markets. Number one is going to be the ranging market, and then you also have the trending market, all right? Boom. So you got the ranging market and the trending market. I want to toss it out there that this strategy works for both markets. All right, the strategy works for both markets. So it's not like, you got to get better at one or the other. It works for both. There is minor tweaks between the two, but for the most part, it's still the same 3 steps, and it works for both, okay? What I want to focus on today is the ranging market, okay? Because I know a lot of you here like to get in and out with your trades, right? How many of you here like to take those quick, especially when you're trading binary options? You like to take those quick positions in and out so you don't have to worry about it. Get in, get out, do what you got to do and make your money, right? If I can teach you guys how to make in about 30 minutes to 40 minutes, right? How to make what you usually make at your job, working an entire day. If I can teach you how to do that in about 30 to 40 minutes, how many of you here can get excited about that, right? Drop some sevens in the chat if you can get excited about that. If I can teach you how to make exactly what you make or even more at your job working a full day, I can teach you how to do in about 30 to 40 minutes of being on the charts. How many of you here can get excited about that, right? Cool. See, we got the sevens rolling in. Let's get it, right? So we're gonna focus on the range real quick. Now, when you're trading the range, okay, I want to note this as well. When you're trading the range for most people is just really, it's consolidation, okay? And I know a lot of traders don't really like to trade consolidation, especially if you're looking for big moves in the market, like from here to here, right? That's 30 pips, boom, right? 30 pips in 2 hours, right? Not bad. But remember what I told you guys on one of the last live streams that we did. We talked about how, I think it was the pros and cons, right? Or MT4 versus binaries, right? Or whatever. But we talked about how we don't need to be correct for a long period of time. We just have to be correct within that time, right? So when we're talking about trading the range or trading consolidation, most people don't like to trade consolidation because the market doesn't move a lot. Whereas with binaries, you can actually trade a consolidated market like this. This is actually very smallly consolidated. Or you can trade a larger range, right? A larger range in general, and catch some of those bigger, reversals. When we're trading the range, all we're really looking for is the quick reversals in the market. We only have to be correct for like one candle, anywhere between 1 to 3 candlesticks, right? So you want to have a strategy and confirmations that kind of line up with that, whereas you're able to get in the markets and get out just as fast, but also obviously be and remain profitable, okay? So let's say, for example, before this big move up, right? So we're not going to look over here. We're going to look in this area because this is a nice little ranging area, right? Consolidation, okay? So let's do this. All right, boom. So we see this little consolidated market here. Market's going up, boom, 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 boom. Now, another note that I would say is that I don't like to trade when you're looking at the Bollinger Bands, okay? I don't like to trade small areas like this in the Bollinger Bands. So we know that when we're trading the Bollinger Bands, we're typically looking for the markets to come to either the top Bollinger Band or the bottom Bollinger Band, right? This is our overbought up top and our oversold down below, right? So when the markets is it's oversold, too many people are selling, okay? Obviously, the market's going to come up. When too many people are buying, the markets are going to come down, right? I don't want to go too deep into detail with that. We have plenty of videos here on my channel where I go over that stuff and I go a little bit more into depth with that. But just understand this. We are looking for the markets to come to the top Bollinger Band, okay, or the bottom Bollinger Band. When it comes to the bottom, we're looking for buys. And when it comes to the top, we're looking for sells in the market, okay? When the market is overbought, what goes up must come down, okay? You don't want to buy when the price is too high, okay? When the market is oversold, you gotta buy it up, right? Obviously, if the price is low, you get a nice discount on that price. It's time to buy. Now, when we're trading this, going back to what I was just saying, okay, is this right here. When you're trading the Bollinger Bands, you want to typically see some nice space, okay? Some nice space between the bands, Okay, so this right here is nice space. This is really tight. It's almost like a small tunnel. You guys see that? So it's really tight. I typically don't trade these small tunnels. Okay? I like to see nice space between the top and the bottom band. So between here and here, there has to be a nice gap between the two. A nice gap between the two. Are you guys seeing that? Nice gap. Right? When it's small like this, the reason why I don't like that is because that's too much consolidation, right? And too much consolidation, it can lead to uncertainty when it comes to your trading, right? So this is typically where you see a lot of small candles, you see a lot of wicks, that kind of stuff. So all this uncertainty where there's no real direction in the market, I like to stay away from that, and I like to just trade, okay, nice big spaces when it comes to the Bollinger Band. Does that make sense to everybody? You guys following along so far? Let me know in the chat. All right. Now, here's what we'll do. Okay, cool. So you guys got it. All right. Now, remember what we talked about on the last live stream. Okay. Remember when we're looking for, okay, potential setups, we're looking for reaction points, right? We're looking for what happened in the past, which is the left-hand side of the screen, to be able to tell what's going to happen on the right. Okay. Now, before I get into moving forward and looking at the actual charts, let's go over some of the other indicators that are on the screen as well, because this is the three-step setup. Okay. So, number one is obviously Bollinger Bands. I just taught you a little bit about the Bollinger Bands. Number two is going to be our stochastic. So if you've never used the stochastic before, my whole strategy is based off of Wyckoff, right? Wyckoff theory, right? Which is overbought, oversold, okay? So when you're using the stochastic oscillator, we're looking for the same exact thing. We're looking for these white lines right here, which is momentum, okay? The white lines is momentum in the market. We want to see momentum either overbought or oversold. So whenever momentum crosses above this 80% mark right here, which is my red line, and your colors are going to be different. These are my custom colors, so you don't got to focus too much on the colors. But whenever the white lines, which is momentum, cross up above my red line, okay, this is an overbought market. That means too many people are buying. It's kind of reached its peak, it reached its point, and now it's going to start to come down because, again, you don't want to buy when the price is too high, right? Same thing for the bottom. When momentum crosses down below this 20% mark, which is my blue line right here. This is the blue line going across. Momentum comes down below 20, okay? This is the oversold stochastic. All right? Prices are good enough to start buying up at a cheap price. Okay, so that's the oversold stochastic. Now, what we're looking for is this right here, okay? Actually, you know what? Let me do this first. Right, let's go over it. So that's the stochastic. Now let's look at the DMI. So the DMI is going to be very similar, okay, as to the stochastic, okay? So it's pretty much the same thing. We got a red line on top, right here. We got blue line on the bottom, right there. And we got our momentum line in the middle, which is our white line, okay? Now, I like the DMI because I use two different settings. So even though they're both momentum-based indicators, there's two different settings on them, okay? So they're kind of doing something a little bit different. But you want them to line up to tell you the same thing. So when you can get the confluence between all three indicators that are all doing something different to line up and tell you the same thing, this is how you know when you have a good potential setup, right? So with the DMI, okay, what I like about it is this right here. When momentum comes into overbought or oversold, so in this case, it's above the red, so that's an overbought market. When it comes overbought and then reverses out, as soon as it stops being overbought, you're going to get a nice signal from the indicator. So in this case, there's an S for the sell signal. If it was on the other side and it crossed out of the oversold mark, you'll get the B for the buy signal, right? So the S for sell, B for buy, all right? Now how I use this is very easy, right? What you're going to want to do is okay, you're going to want to look for a 3-for-3 confirmation. 3-for-3 confirmation. All right. Now, what I always tell people is this. When it comes to trading binaries, you have to separate, or even scalping, right? Scalping binaries. I just say binaries because that's what I trade, right? But when it comes to trading binary options, you have to separate your entry point from your confirmations. You know, a lot of traders, when they trade, they don't separate the entry and the confirmation. They just look for confirmations, and then their confirmations, once they get all their confirmations, they jump right into the trade. And this is where a lot of people usually ask, like, do I take the trade as soon as I get my confirmations, right? The answer is, for binaries, no. You don't want to take the trade as soon as you get your confirmations, in my opinion. The reason being is because with binary options, you have to be correct at a specific price. So whereas with leverage, and we spoke about this as well, but when you're trading leverage on MT4, MT5, okay, you have room to be incorrect because you're usually setting a stop loss that's like 10, 15, or even 20 pips away from your entry. So you could be 20 pips in the wrong and still remain in that trade. So if I'm looking for a sell right here, right? If I'm looking for a sell here, and let's just say I get in at the wrong price and I get in right here and it shoots up a little bit more. It wouldn't matter on leverage if I put a 10 pip stop loss because as long as it doesn't come up here and hit that stop loss, I'm good to go, right? Binaries, it doesn't work like that. So it's almost like you got to be correct and you have to get these beautiful sniper entries, right? You got to get these sniper entries. So you got to get in the markets at the right time, right? Or the right price and remain in that trade for the right amount of time, okay? So this is how it works, okay? So you guys got the 3 confirmations so far, right? First one, we want to see in this example, we're going to look for overbought on the Bollinger Band. So did the markets come up to that top Bollinger Band? That's number 1. Number 2, is our stochastic overbought as well? And then finally, number 3, is our DMI overbought? Okay? So once you get the 3-for-3, now remember, if you watch some of my other videos, they don't have to come in that order. Sometimes you might get the stochastic overbought before you get the Bollinger Bands. They don't have to come in a specific order as long as you have all 3. Once you get 1, 2, 3, now it's time to start waiting for and identifying a potential entry point, right? So 1 is the confirmations. 2 is the entry point, okay? So for our entry point, it's going to look like this, all right? What we want to see is, we want to see our stochastic cross in the direction that we're looking to trade. So you see how our momentum lines are coming up, 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 up. Then they cross going down. Once they cross going in the direction that we're looking to trade, right? This is where we want to go ahead and enter the trade. Now here's the key, because there's a method to this madness, right? The key is this. You don't jump in right away. What you want to see is you want to wait until the candle closes, okay? And make sure that they stay crossed. That's the big thing. You got to make sure that they stay crossed. So you got to wait until the candle closes and make sure that they stay crossed. How many of you here have ever entered a trade before and you thought it was going to go in your direction, and then as soon as you enter the trade, it goes the opposite way? All right? Drop an LOL in the chat, guys, if that's ever happened to you. You thought, and then you enter the trade, and as soon as you enter, it went the opposite way. Right? They used to always happen to me. Back to back. It still happens to me sometimes, right? I'm not perfect. No one's perfect, right? But the best way to avoid that, especially in binaries, okay, is to wait for a nice solid candle close, okay? And there's a bunch of different candle closes that you can look for. You can go for just a bearish, like for example, if you're looking for sells, you can go for just a bearish candle close, or you can look for a little bit more in depth, like a bearish engulfing, right? Because like this example here, this is a bearish candle close, but this is not a bearish engulfing candle. And look what happened on the next one. It went up. Whereas if you're looking at every single one of these, bearish engulfing drops down, right? Every one, even the example that we're looking at, where you have the candle that's bigger, all right, you're typically going to see a larger drop, all right, after that, okay? So in this example, we do have a nice bearish candle, bearish engulfing, It goes ahead, it closes out, and then after it closes, as you can see, the market drops. So we got the Bollinger Band, Stochastic, DMI. Check. Then we look for potential entry. We look for a stochastic cross. We wait for the candle to close. We enter on the new candle. And as you can see, 5, 10, 15-minute drop. So if you would have gotten in anywhere from between 5 and 15 minutes, you would have cleared that trade 100%. Okay? Now, let's get to what we actually going to be talking about, because I just wanted to break down the rules for you guys. All right, I wanted to break down the rules, and now we're going to play it out. Okay, now we're going to play it out a little bit more. So remember what we talked about on Wednesday's session. I told you guys, when you're looking for potential support and resistance, everyone asks me all the time, how do you do your support and resistance, right? You guys know I have like the simplified method that I use, okay, which is very simple. I only really mark up my support and resistance as I'm trading, right? So literally as I'm in the markets and as I'm looking for the setup, the first thing I want to do is, and I'm just deleting everything here, right? But what I like to do is just watch the market do what it does. Okay, so that's all I'm doing. I'm just watching the market do what it does. And as I start to obtain a few confirmations for my trade setup, like what we have in right here, once I have those confirmations, this is typically where I start to begin to look for some potential reaction points. So if you were on Wednesday, you remember we spoke about reaction points in the market, right? So as we're coming into, let's just say, for example, I got the bottom Bollinger Band here. So we got that, check, good to go. All right, we're almost entering this oversold on the stochastic, and then my DMI is already oversold. So we don't have 3 for 3 on the confirmations yet, but we're almost there. Now, it's very important to wait for all of the confirmations, because you're going to have multiple times where, like, for example, just because the Bollinger Bands are oversold doesn't mean the markets are going to reverse right away. You might have a few candlesticks in the Bollinger Bands before they actually go in the direction that you're looking to trade. So you always want to wait for the confirmations. Okay? Now, as we get closer to the market doing what it is that I'm thinking or what it is that I want it to do, I start to immediately start to look to the left-hand side of the screen to look for some potential reaction points. Okay? So let's say the market is coming down right now. The markets are coming down, as we can see. I got my Bollinger Bands good. My stochastic is finally oversold. Boom. My DMI is oversold and flat. It's flat line, right? Which means it's going to be coming up soon. So now my question is, okay, when is it going to come up? And not only when, but at around what price point? So we know the when is going to be at the stochastic cross. Now we just got to figure out around what price is it going to come up at. So if we're looking, remember I always tell you, look to the left-hand side of the screen. If we're looking at where we're currently at in the market versus where we have potential reaction points over here, you can see that we're pretty much at a price where in the past we've had multiple reaction points. Just about this area. Now, that's not to say that it's guaranteed that it's going to bounce up around this area. Remember, I tell you guys, when you're looking for support and resistance, it's not an exact price. It's going to be a zone. That's how I do my support and resistance. It's zones. It's areas. But as I'm saying, it's not to say that it's always 100% going to bounce to that area. But it's a pretty good chance that if you have these reaction point zones, right, and then you also, I'll just go ahead and do this. I like to do a nice combination between bodies and wicks. So as you can see, we have multiple bodies, wicks, right there in that little yellow shaded area, right? But then we also have our indicators, all right, confirming as well. Okay? Boom. Look at that. All right? Stochastic cross. Clear. So the stochastic cross on this candle. If you guys seen that. We enter. Blue. Nice blue. Clear. That's it. That's it. Now the market is starting to come back up to the top. If you guys see that. We got a nice big engulfing, bullish engulfing. Followed by another big candle. So we got some nice juicy candles going up top, right? So now that the markets are coming up, remember I said we're going to be in and out. in and out of this market, right? So we cleared this trade 5 minutes, right? Let's just say. The markets are now coming up to the top. I'm looking at my indicators. My indicators are looking like they're about to be overbought, right? So now my next question is, what's the reaction point at the top? What's the reaction point at the top? So again, what do we look? We look to the left-hand side of the screen to be able to tell what's going to happen on the right. So now I'm looking, and this is what I see. I see potential over here. This is around that same price. So all of this right here is pretty much around the same price. So what do? I'm going to look for the markets to potentially give me some kind of reversal, maybe in this area. Now again, it's not to say that I'm going to be 100% correct, right? But this is just the way that I think about it. This is the way that I think about it. If you guys were on the session with us a few days ago, you remember at the end of the session, right, I gave you two analysis, right? One while we were on the session, and then one if you're in the Telegram, right? Make sure you're in my RockStarrFX Telegram, by the way. The link is in the description. Don't join the wrong one and get scammed, right? But the the first trade, we saw clear, literally clear, and do what I said it was going to do right there on the session. And then the second trade, it was, I called it out during the session, and then it happened when we were already off, but I put the video inside the Telegram for you guys to see. It happens over and over and over again, right? So now, all right, and this is a random pair, by the way. I didn't choose this or anything like that. I think I was probably trading this yesterday yesterday or the day before. But so that's why I was on it already. But so random pair, we're looking at some random ranges here. But market starts to come up. So we're going to look at, and we're just going to say maybe in this area zone. Why? Because this is the top of the market right here. We're getting reaction points. Multiple reaction points. Right? In the past. So now I already know, I know what it is that I'm looking for, right? When it's going to happen, okay? And the price of it, it's probably going to happen around. So when it's going to happen is our entry, which is our stochastic cross. That's when it's going to happen. The price is going to happen around is going to be right about here. So remember, binary options is based off of time and price. If you can get good at just understanding time and price, this is where you start to make a lot of money, right? So it comes up, and there you go. Look at that. Clockwork. Clockwork. Do you guys see this? Again, I can't make this up. So the stochastic crossed on this candle. Pretty sure it was that candle, right? Let's see. Let's go back. Sometimes when you go back, it glitches, but let's just see. This one actually crossed right here, too. So we had a nice entry on that one. Boom. Then that one crossed in between candles, which means, yeah, we would have entered probably on that one. All right. All right, let's keep going forward. Let's see when this crossed. All right, so this one crossed here. This one crossed on this candle at the beginning. So whether you would have entered, I mean, it doesn't really matter, but whether you would have entered here or whether you would have entered here, you still would have cleared the trade. All right? Now, mind you, look, remember I said, right, we're in and out. So now, how long have we been trading so far? Okay, 5, 10, 15, 20, 25, 30. So about 30 minutes we've been on the charts, right? You already got 2 back-to-back clears. Most people will be okay with clearing 2 trades back-to-back and then finishing for the day, right? But let's say you want to keep going. All right? And remember, this is like a combination of what pretty much everything that we learned this week. All right, kind of just putting it all together for you guys to see. So remember, we're looking for your 3-step setup. Once you got your 3-step setup, okay, remember the setup is not the entry. So once you got the 3-step setup, you're now looking for your entry point. Your entry point is going to be a combination between the stochastic cross and previous reaction points, which we know is our support and our resistance levels, okay? That's how I do it. We move forward a little bit. Marcus is back at resistance, but we don't have any confirmations yet, so we're not getting into trades. We're not looking at trades. There you go. Another one right there at the same exact level. Now, remember I said, too, I said You could keep the same lines up there. The same lines up there. And use these same levels again and again and again. Because a reaction point is a reaction point. It's always going to react. Right? Let's see exactly where it crossed at. What candle did we get that stochastic cross? Let's go back and look. Right there. Boom. This one. I'm doing amazing, Owen. How are you doing? What do you guys think so far? What are you guys thinking about this? All right. So look, back-to-back examples. We got 3 examples, 3 wins. 3 examples, 3 wins. Here's number 4. Right, so this one, look, and this one was a good one too. This one was a good one too, especially if you're not patient and you don't wait for your confirmations, right? So this one, the stochastic cross back here. But remember, we're not at our bottom Bollinger Band, so that's 1. And we're not in our buy zone. Remember, you got to wait for that support resistance zone, right? So if you would have entered this just because it's stochastic cross, you would have lost the trade because it dropped down, right? So then you actually wait until it does what it's supposed to do. Comes down into the zone. Now we're in our buy zone. Now our DMI gave us the buy signal. Now our stochastic crossed up, right? We're going up on the stochastic. You go ahead and you enter that, and there you go. There goes another win. 4 for 4. Okay, 4 for 4. Let's keep running it. I mean, and I can do this. I can literally do this all day, and you guys will see that obviously it's. I mean, here goes another one. 5 for 5. You can't even make this up. Like, you guys see how simple this is? Drop some 7s in the chat if you guys think this was simple. Well, I'm not saying it's gonna be easy, but it's definitely simple. We got 5 for 5 on the screen right here in front of you. And all you're doing, all right, you're learning 2 things. That's it, just 2 things right now. Number 1, my 3-step setup, okay, which I have plenty of videos here on YouTube going over, okay, including this one. I briefed through it real quick. That's number 1. And then number 2, you're combining that with what it is that I told you guys on Wednesday's live stream, which is how it is that I mark up my support and resistance. I keep it super simple. I only mark up when I'm trading, and I do it based off of previous reaction points at or around the point in which I'm looking to trade at, right? And I keep those there for that day or even that week. And every time price comes back to that area, I know if I can get my 3-step setup at that buy or at that sell zone, this is where I'm looking to enter for about 1 to 3 candles. Usually about 1 candle, right? Usually about 1 candle. And you guys see it happens again and again and again. So we got 3-step setup, support. 3-step setup, resistance. 3-step setup, resistance. 3-step setup, support. 3-step setup, support. Bow. Why do I call it 3-step setup? Because it's easy to remember. And it's only 3 steps, right? I'm a very simple person. I like to keep everything nice and easy, right? Nice and simple. There goes another clear. That's 6 for 6. And the crazy part is, guys, is that this is just one currency pair. This is one currency pair. You could be trading, and while you're waiting for setups, go to a different pair and use the same exact strategy and place a trade on that pair, win that one, come back, win this one. Go, like, you know what I'm saying? So about 2 hours. Yeah, 2 hours, you got 5 wins. 3 hours, you got 6 wins. 6 for 6. Did you guys understand it though? Did I break everything down nice and good, or how you guys feeling? Do you have questions? Oh, here's a good one. Here's a good one. This is it right here. Watch this. So I like trades like these. So these are like the breaks and the retests, right? So typically when you get like a break and a retest, I like to go on for a little bit longer. So this is an example because I know a lot of people ask me about the 3-step setup. Let me see if I can find any more breaks. We'll just focus on this one. But I always like to use whenever price breaks structure, right? So here you see we broke support, right? And even here, right? Because I know people will ask this too. You'll probably get a little bit confused. So the markets came up, and I want you to pay attention, okay? So the markets came up to our resistance level, right? And typically we would be looking for buys at resistance. But who can tell me in the chat? Who can tell me in the chat why we didn't? I mean, we're looking for sells. Sorry, sells on resistance. Who can tell me in the chat why we didn't take any sells with this trade right here? Let me know in the chat. Why didn't we take, even though we're at resistance right now, we got 3 for 3 on the setup. Why did we not take the sells? Who can tell me? Let's see if you're paying attention. Nobody got it? There you go. That's one. SB got one of it. There's no red candles, so we didn't close on a red candle. That's one. All right? That's one. All right? There's no bullish engulfing here. There's no bullish engulfing. Because they're all bullish, right? So you can't have a bullish engulfing when they're all bullish. Right? So there's no red candles, which means we didn't close out red. And then number 2, we didn't get our entry point. We didn't get the stochastic cross, right? So just because, remember, I always tell you guys, you have to separate the confirmations from the entries. So just because we got all 3 confirmations and we're at resistance, which would also be another confirmation. So technically that's 4 confirmations, right? Doesn't mean we enter yet because we separated confirmations from entry. So if you're patient, see, that's the problem though. A lot of traders are not patient and they get excited about the setup and they get excited about potentially missing the trade. And I always tell people, I'd much rather miss the trade and not make any money than to force a trade and lose money. Right? I don't play to lose, I play to win. So this is a perfect example as you're looking at the strategy, 3 for 3 comes in, but you didn't get the entry point. So you don't do it. You don't do it. Even like right now, look, it's starting to come down. You don't do it. Now at this point, I always tell students, because students always ask me this as well, at this point, even though the market is coming down, I still wouldn't enter this. Why? Because somebody said in the chat already, we already broke. We already broke our resistance. That's it. We broke. That's no longer resistance. So the next best thing to do is, okay, is to wait for it to come back down and retest, making that old resistance new support. All right, that's what you want to do. Once it breaks like this, we got 3 candles broken, right? Closed out above, all right, continued up, continued up. Once it breaks like that, okay, yeah, it's going to come down, but I'm not even excited about this quick, reversal. I don't want that because it might not happen. When you're looking at trading, it's all about probability. I'm looking at, okay, I would much rather the safer trade is to see it come down, bounce off of our old sell zone, which is our new buy zone, right? Bounce off of this buy zone and continue up, break and retest, right? And that's what I would be looking for. Now, it's not to say that it's always going to be perfect, again, but you do want to wait for your 3-step setup. And like I said, when it's the first time it breaks, I always like to get in for a little bit longer. So I'll probably give it some time to move because I know that it's a break and a retest. I know that typically it's going to keep going in that direction. So I'm going to be in this trade for at least 3 candles, at least, bare minimum. 15 minutes, right? 20 minutes, depending on what your expiration is, to be honest with you, right? But I want to make sure that I give the market some time to move because I already know that it's a break and a retest. I know it's retesting, and I know it's going to shoot back up. Okay? So I can't be incorrect is my point. It's going to happen. All right? But that's a good example right there of how it is that I go ahead and do that. Yeah, no, savvy, that's 1,000%. But it's not just you, right? A lot of traders have no patience whatsoever. Right? A lot of traders have no patience whatsoever because most of the time we're just trading to make money. Let's just keep it a buck, right? But when you get better at it, okay, when you get better at it, it starts to make more sense. There's 7 deadly trading sins, right? I'm going to teach you guys the 7 deadly trading sins, okay? I'll probably do a whole nother video on this. Would you guys want to see that, right? But the 7 deadly trading sins are this. Number 1, revenge trading, all right? And if you guys can relate to any of this, all right, just drop something in the chat for me, all right? But number 1 is revenge trading, all right? Getting too emotional, all right, and getting back into that trade or getting back into more trades when you know you shouldn't be, right? Number 2 is gambling, all right? Now, gambling, remember, this is a trading sin. It's not a binary option sin. It's a trading sin. So being that it's here, you know, people say all the time, binary options is gambling. No, trading, okay, trading as a whole can be seen as gambling. But it's a sin to actually play it like that, right? So number 1, revenge trading. Number 2, gambling. Number 3, trading with emotions, okay? Bad. Number 4, slothfulness, okay? Slothfulness is being lazy, unprepared with your setup, right? You're just getting in just to get in. You have no real strategy, no real game plan. Number 5, FOMO, the fear of missing out. We spoke about that just now, right? The fear of missing a trade. I'd rather miss a trade and not make money than lose a trade and lose money, right? So FOMO is a big one, okay? Fear is another one, all right? Scared money don't make money. Remember that. So you can't have that fear of losing the money in your account. You should be focused on gaining money, not losing money. So fear, not only to lose money, but fear to even place the trade. A lot of people have a lot of fear when it comes to trading. And number 7 is ego, okay? Nobody wins 100% of the time. It's okay to take losses. You can't let your ego get in the way of you trading, okay? Because your ego is not your amigo. If your ego is bigger than your bank account, your ego cannot be your amigo, okay? So 7 trading sins, man. Learn them. I'll probably do another video on that. I got like a whole freaking training for that, right? But yeah, guys, let me see. How long have we been on? We've been on for about an hour. Like I said, I didn't want to make this too long because I want to make sure you guys get the information. You're able to come back, rewatch it, you know, get your notes in and stuff like that. But hopefully all of this made sense. Like I said, this 3-step setup and then how it is that I mark my support and resistance. It makes for the perfect, super simple, easy strategy that anyone can trade. Even if you don't know how to mark up charts, if you don't know anything about the markets, if you don't even know what a pip is, you can come in here and make money with what it is that I just taught you guys. So hopefully that makes sense. If it did, as always, drop a like on this video. Subscribe if you are not already subscribed. And feel free to share this thing out with everybody that you guys know. Because we're going to continue to run it up, man. I love this YouTube thing. Like I said, I never thought I would actually, you know, be doing this. But I'm here. And we literally about to hit 100,000 subscribers. I remember when I had less than 1,000 subscribers. And I was just uploading random videos for, you know, for the people that I was teaching on a personal level, which is crazy. Now we fast forward here, and I have close to 5 million views, man. So excited about that, man. Appreciate y'all as always. And let's get it. It's your boy Rico, aka RockStarrFX. I am out for tonight. Hopefully you enjoyed. Let's get it. Peace. Woo!